Hello friends, I am Rehman Bhamani and today we are going to discuss about Jindal Stainless Hisar Ltd. First let us understand about the company. So Jindal Stainless Hisar Ltd was established in the year 1975 by Shri O.P. Jindal, and the company has a capacity of 8 lakh tons per annum, and it is world's largest producer of stainless steel strips for razor blades. You or your family members must have used razor blades. So the strips from which the razor blades are made is manufactured by this company, and it is India's largest producer of coin blanks. Now what are coin blanks? So I have come to Google and search for coin blanks. So these are the coin blanks from which the currency coins are made. The base metal which is used, stainless steel, is manufactured by this company, and the product range include slabs and looms, hot rolled coils, cold rolled coils, plates, blade steel, coin blanks, and precision strips. So these are all product of stainless steels which the company manufactures. Now this company is going to be merged with JSL in coming few months as per the company's latest announcements. So the company is expecting this merger to get completed in the second half of FY22, which means by the end of September. So major events which are expected to be completed are board approval of the scheme arrangement, stock exchange and SEBI approval, which is already been received in March 21, which is before of schedule. And the company is also expecting shareholders and creditors approval, NCLT approval and implementation of the scheme. So once this merger is implemented, both the company will be one. JSL and JSHL will merge into one after the merger. Now currently, what is the shareholding pattern of the company? We will look at the last 5 quarters for the promoter shareholding, and we are looking for last 5 quarters. So in June 2020 also it was same, and then September also same, December also same, and March also it was same, 57.67% share in the company. But in June quarter, which was the last quarter, the promoter holding has increased a little. Also, we will look at the pledge of promoter shares. For the people who don't know what is pledge, which means they have given their shares as a pledge, as a security to some banks or some other institution where they have taken any loan, या जिसको हम हिंदी में गिरवी रखना भी कहते हैं. उन्होंने अपने शेयर्स गिरवी रखे हुए हैं कहीं पर. So it was constantly same for the last 4 quarters out of 5. So it was consistently 87.70% from June 2020. Then September also it was same, December also it was same, March also it was same, 87.70%. But in June quarter, the pledge percent has reduced a little, which means the promoter have unpledged their shares. उन्होंने अपने शेयर्स जो गिरवी रखे हुए थे वो वापस ले लिए, which is a good sign for the company. Now let us also check the income statement. So we will be looking at the last 5 years performance of the company. First we'll look at the sales figure. So starting from March 2017, the sales was, friends, all these figures are in crores of rupees. So the sales was 7,774 crore, then 10,537 crore, then 10,288 crore in 2019, and in March it was 9379. This was obviously because of COVID. the sales has dropped a little, and in March 21 also it was around the same level of 9,400. But the good part is the profits are increasing year on year. So you can see in 2017 the profit was only 240 crores, then it was 440 crores, then there was little drop in these 2 years, it came to 344 and 374, but again 2021 the profit has increased to 549 crores. Also, an important point to notice is the interest which the company is paying. So earlier in March 2017, the company was paying 431 crores of interest, which reduced little by little. In 2018, it was 408, then 367, then 322, and in March 2021, it was 290 crores. So if the interest is reducing, it is a very good sign for the company, because if the interest reduces, the profit will obviously be greater, है ना. अगर हम ब्याज कम दे रहे हैं तो हमारे पास में जो लास्ट में प्रॉफिट बचेगा वो ऑब्वियसली ज्यादा ही बचेगा. Okay, let's move on to see the quarterly results. So here also we'll look at the last 5 quarters starting from June 2020 to June 2021. In June 2020, the sales was 852 crores. If you guys remember, this was the time of the lockdown and everything was shut down. So the sales has reduced and it was 852 crores. Then in September it has improved and it came to 2298, then 3146, 3102 and 2776. So the sales is now picking up. Here also again in June 2020, obviously because of COVID, the net profit was in negative, that which means there was a loss of 53 crores. And after that the profit started improving. In September 2020 it was 141, then 210 in December, then 251 in March, and then 358 in June 21. So here you can see a clear indication of growth. The net profit after tax is continuously improving. Let us also check some important ratios. So earning per share for the last 5 years, in March 2017 it was 12.25, then in 2018 it was almost double of it, and then it dropped to 16, and again 16.65, and then 29.40. So in March quarter it was 29.40, which is obviously improving compared to the last 4 years. And another important factor is debt to equity ratio. For the guys who don't know what is debt to equity ratio is, I will just explain you in brief. For every 1 rupee which the company owns, how much loan the company has taken is simply depicted by the formula of debt to equity, which means the loan which the company has taken divided by equity amount which the company is holding. So let's say if the company has 2 rupees of loan and the company has only 1 rupee of their own, so debt to equity ratio will be 2:1. अगर 2 रुपया हमने लोन लिया हुआ है और हमारा खुद का सिर्फ 1 ही रुपया लगा हुआ है, उस केस में डेट टू इक्विटी रेशियो हो जाएगा 2:1. And here it was 3.77, which means the company had taken near about 4 rupees of loan for every 1 rupee which the company owned. ठीक है, which was a very risky situation in 2017. And now it has come down to 0.48, which is a very good sign. The company's debt or company's loans are reducing. Another issue is return on capital employed. Return on capital employed means on the amount which the company had utilized in the company, how much returns they are getting out of the capital which they have invested in the company. So it is near about 20, in the range of 20 to 22%. Net profit margin, for the guys who don't know, net profit margin is basically if the company is doing a sales of 100 rupees, how much the company is making profit after all the expenses. So if you count in percentage, on every 100 rupees sale, they are making a profit of 3 rupees. There it was 4, then 3.34, then 3.99 and 5.84. So it is improving year on year, which is a very good sign. And the current price of the share is 292.80 rupees. And 52-week high is 307.95, 52-week low is 74.95, market cap is 6,908, EPS is 48.51. EPS means earning per share on one share, how much the company is making. And if you calculate this in a percentage, 48.51 divided by current price, which is 292.80 into 100, which will give you 16.57. So at the current levels, the company is earning 16% on the current share price, which is 292.80. So which is very good if the company continues this kind of earnings in the future also. And the PE ratio is 6.04 as against the sector PE of 16.07. So it is a very good company on the basis of income statement and the expected merger, which is expected by the end of September. So from my side, this can be a buy at least till the time of merger, and after merger it depends upon the situation, it depends upon the, and after merger it depends how the company takes up this merger and how it performs in the future. That's all from my side. Friends, if you have any questions or you want me to make analysis on any specific company, do let me know in the comment section. Do hit the like button if you had learned anything new in this video, and if you like the video, do share it with your family and friends, and subscribe to my channel and hit the bell icon so that you will receive all the future notifications of my videos. Thank you so much.